Hello, everybody, and welcome to this week's podcast for the week of September 17th, 2025. I'm Miles Clark, joined here by my red-haired brother, David Clark. How you doing, my friend? Is it red? What
Pleasure.
is it? Blonde? What are you typically doing?
I just generally say red. My wife says it's strawberry blonde.
There you go.
I don't try to get overtly complicated. I already have long hair. It's already its own thing. If
Yeah.
if you have long hair, if
Well,
you get
David,
too descriptive into your hair and having long hair,
right then
kind
it's
of
kind of like, all
irrelevant.
right, yeah. Well, David, pleasure to be here with you. Of course, always nice to get you up in Richmond. It has been raining here, so
I brought the rain with me.
oh,
Where I'm living, it hasn't rained in a month, and then we get here, and it's like it just sits here and
yeah.
downpours while I'm here.
All right. Well, that's enough. So enough small talk here. In terms of markets, we are recording on a pretty big day. We just got a rate cut decision here. Fed Chair Powell is speaking as we speak. You're probably not listening to us though with the same level of importance I think that he probably brings. Regardless, though, markets are moving around pretty quickly. So if we check our computer and we're suddenly down or we're suddenly up or whatever it is, just know that we're actually recording in real time. Over the last week, though, not just talking about today, over the last week, pretty productive for major markets. On the international front, emerging markets really continuing to do well. On the domestic front, the Nasdaq Composite, the S&P 500, both in positive territory. Only name we typically look at that's negative, US dollar, right? And that's going to be that inverse relationship between the US dollar and international markets.
Well, and you've seen in like the case of the Nasdaq Composite, Nasdaq 100, they went on a stretch of positive days there where we saw, I believe, 9 days for the Nasdaq 100 positive, 6 days for the Nasdaq Composite. So helped build on some of that recent action, seeing them go to all-time highs. But this week sort of brought about some, the past couple of days has been muted since we've been waiting
Yeah,
for today
yeah.
almost. So even though we're seeing highs, it probably hasn't been as much to the upside as some may have thought because we've really kind of been coasting a little bit, just kind of edging our way higher up until today, Wednesday, until we've started to see some really, and it's not to say today's super hyperactive in terms of action. It's just we were all kind of, it was like a waiting for the pin dropped moment. We're waiting for what the Fed was going to say.
Right. And, just to kind of recap, we got our 25 bit cut, which was widely expected. Of course, that was all but a foregone conclusion that that was going to occur. It was more so, of course, what are the projections like? What is the commentary around the labor market? Because, again, people typically think rate cuts are, good for stocks, cheaper capital is going to be out there floating in the market. But of course, right? Always on the other kind of side of that is, well, they cut rates for a reason, and that's because the economy might not be doing so well. There's, labor struggles that might be
Mhm.
happening. So, of course, we're not the first ones to say it. It's going to be a very fine line that we're all trying to walk here, but that's really what the markets are really digesting. And so, even in the last 10, 15 minutes, we've swung from, up 0.5% to down 0.5%. And so markets are really still digesting what we're seeing. Isn't that right?
Right. Well, and in terms of what we've seen going on some of those fixed income charts, we've even seen some action there because while we haven't necessarily seen additional action or additional to action to some of those rate charts, they've kind of already settled where they were. We haven't seen much additional downside there, but today's action today, we did see additional upside out of AGG to the extent that it's now trading at its highest level at 101, that being its highest level since October of 24. So we're, even seeing that intraday action carry over to where we're seeing additional upside action out of AGG, at least for the moment. Again, nothing for the time being additional to TNX, that 10-year yield chart that we often look
Right.
at, but it had already fallen down to where it was kind of testing those April lows anyways. So that's another piece where I think in the coming weeks, people will continue just to monitor as things get digested more, and then see what happens.
Right. I don't have it in front of me in terms of the projections. So, we'll kind of fly blind here. But the reason we saw an initial jump was because, at least in terms of the projections, I believe that they had brought out their, in terms of their 2026 projections, their kind of target rate, if you will, was lower, or they revised it down, or something along those lines. And so, that would be the inverse relationship between yields or rates and fixed income. So if they're revising that down, that means that outstanding fixed income needs to go up, right? So
Mhm.
hence the price appreciation for AGG there. But broadly speaking, fixed income still a relatively weak part, a broad asset class, still, relatively weaker than domestic equities, commodities, international equities. So, there certainly is a conversation there, but in terms of long-term relative strength, really still not much in the way of, hey, we need to be overweight this group, right?
No, not at this time. And I mean, when even then, a lot of people have been, I think the impact, people are focused on now is not so much what's happening to my fixed income portfolio, but what is lowering rates going to mean for the rest of my portfolio.
Right.
So that's where I think most of our questions have probably come from. And again, in sort of an interesting case, we've sort of seen, at least leading up to this, indices kind of just edge their way higher.
Right.
So that's a positive in its own way, and you can add more conjecture around it, but we're at least seeing upside prior to a lot of this happening. And, even intraday here, we saw small caps by way of IWM match its all-time chart high. So it's not like we're to the extent that, we cut rates and the market's falling apart by any
Right.
means. I don't think obviously anyone expected that, but sometimes if you watch a news outlet, they may make you think that
Yeah.
way.
Oh yeah. No, I mean there's a lot there, and we'll throw up that it's either a 2 or 3 point chart. Both of them tell
Yeah.
a very similar story for IWM here. Small caps have been a laggard in 2025 for the most part. Now you quickly look and IWM is up like 7 or 8% so far this year. Of
Mhm.
course, still lagging behind the S&P 500, but it's kind of increasingly, I hate to say this because, small caps have done this to us time and time again over the course of the last few years.
Mhm.
Right when you start to say, David, I think they're starting to look good. You know what I mean? Then it,
Yeah.
then it just, whipsaws right in your face. But I mean, IWM fund score on the right side of 3.0 in terms of our kind of 0 to 6 framework that Dorsey Wright has. IWM has an acceptable fund score now. It's crawling its way back up to kind of even with the S&P 500 in terms of pure performance here, and it's matching all-time chart highs on some interesting charts here for in terms of a P&F perspective. Again, there is enough there that you could make an argument for a smaller position, in some places,
Right.
right?
If anything, we're not ignoring them like we used to,
Right.
and that's part of it. And I think what many have longed for the past 2 years, while we've watched equities march higher, it's been this idea that it's the Magnificent Seven. Not that it's necessarily been that, but generally speaking, that's the way people think
It
of it.
has
It's been those
largely been that.
super,
Yeah, yeah.
it's been those super mega cap names that have been responsible for the bulk of it.
Yeah.
Now, and I think now, especially, really kind of starting in July, you started to see some of it, and we were almost in that mode of like, okay, we've seen this before.
Right.
It's not the first time we've watched this, and I think as time has gone along, even moving through August, now on into early September, we're starting to get some of the things where it's maybe making us lean a little more towards, all right, we're getting broadening participation, we're getting help from other areas,
Right.
and that at least is at least an opportunity.
Yep.
It's by no means us making a call that we think small caps are ever taking large from a relative perspective, but the fact that you're actually getting participation out of small caps and mid caps, that's else opportunity elsewhere outside of what we've been playing in the sandbox for the past 2 years in.
Yeah, and I want to maybe add something onto that, and then we can wrap up the small cap conversation. There's going to be people out there, and people have called in and asked this, and they're like, Miles, David, why are you going to say that small caps are acceptable now, right? Like we missed the boat, right? We should have been buying, on April 4th, 2025, right? The lows, right? And of course, everyone's always going to say that hindsight is
Is
2020.
2020, yeah.
But what I think the technical rebuttal to that would be these trends when they take hold, trends can take hold for much more than 10 or 15% or 20% off of bottoms, right?
Mm.
And so what we would be saying is, okay, well, yeah, you're right. We did miss a portion of that upside, But if small caps really can start to put together something, it could just be the start of a kind of
Right.
a constructive picture.
If it ultimately
Yeah,
is going to earn the overweight, it's going to earn it
right,
in
exactly.
many ways. We're
Exactly.
not just going to try to make some call to make ourselves look good.
Right. Yeah. Momentum, I think maybe a feather on that cap or what is it, a bow on that, whatever. The end of that story
Mhm.
is momentum's never going to be the first to the party, right? But it's going to stay there as long as it's
As
welcome.
long as they can.
Yeah,
Yeah.
exactly.
And I think sometimes where people get nervous with momentum is when it keeps you there and that level of uncomfortability that you think it can't keep going, which you're right.
Right.
But while it's going, you sort of have to go with, and it is one of those things that the phrase "it is what it is" is sort of a odd connotation, but that what's transpiring is what you're seeing. And you don't really need to go against that. And that's I think when a lot of people are looking at it, it's like, okay, we've seen this build up for small caps. Could we at least be a part of that in a little way? Yes, but by no means are we to the extent that we're saying
Yeah.
go overweight it.
Right.
And that's not it. That takes time, and that's going to, if that's what develops, then that's the potential when we see it transpire for a longer period of time. But we're sort of watching a number of other things to see if we get confirmation for that.
Exactly.
And one of those is an indicator that I've have kept an eye on, and it's a fairly slow moving one, but when it moves, it's worth knowing, when it
Yeah.
does make a movement. And that being the RS index is for the NYSE. So what this indicator measures, those not familiar with it, is it's going to look at the percentage of stocks that maintain positive near-term relative strength against the market. We define the market by the S&P 500 equal weight. So if you were to look at one of these individual stocks within the NYSE on their market relative strength chart, you would see in a column of X's right now, confirming that near-term trend of outperformance that we're seeing by that position over the market. Now, this indicator we've actually seen move to bull confirmed status for the first time in 2025 and actually move up to its highest level since really late 2023. Now, it's still at around a 42% level, kind of a lower level in terms of what we talk about for a lot of indicators, but this particular one is a one where you see it move high to those elevated 70%
Right.
levels. It tends to hang around that 30 to 60 range. If you
Right.
get near 60, it's really high. So, the fact that we've seen it move to at least bull confirmed status, confirming that we're still seeing that increase in near term relative strength for some of these stocks, is at least sort of, you know, helping that story that we were going to with small caps, and that we're getting some of that broadening participation. We're getting other opportunities where we're seeing relative outperformance versus the market. It's not, at least now it's not just been the same stocks we started the year with. And that's
Yeah.
that's really a lot of what I feel like we're maybe beating our heads against the wall here, kind of beating a dead horse, but that's what we're trying to convey, is that this broadening participation in terms of improvement out of potentially smaller mid caps should be looked as an opportunity, not necessarily some massive asset class call right now, but there is opportunity.
Yeah, no, it's a good point. I mean, I want you to think about, again, what makes up the NYSE, right? There's a lot of big stocks on
Mhm.
there, but there's also a lot of small and mid cap stocks
Mhm.
that are listed there as well. And so, again, seeing an uptick in participation from those guys is just further confirmation that there are, some satellite positions that you could take. And, listen, if you're an advisor, some areas doing better than the core, or at least showing signs that they're improving against the core, take this and run with it. I mean, how long have you just had to go out and tell your clients, hey, we're just buying SPY. That's what's working,
Or
right?
we're buying
You know,
some of these same stocks we've been buying
exactly.
for
What are the
two
things?
years,
Exactly.
and we could list the Magnificent Seven there as well as many others,
Right.
but you're at least able to have a different conversation,
Exactly.
is
Hey,
what
we're
we're
going to
alluding
go
to.
find value elsewhere. We're going to go overweight a stock that, your benchmark, the S&P 500, can't overweight. We're going to go pick up and going to go get some alpha here, whatever it may be. So again, a strong core is both a blessing and a curse because it's easy. You just go buy the benchmark and that does really well. But at the same time, we can't necessarily provide as much value or to the upside, if you will, when we are just, marking to the market, right?
Yeah.
And so take that as you will. Speaking of an area outside, actually, are you good on the
Yep.
participation
Go
now?
ahead. Yep.
Speaking of other areas that are doing really well, Precious metals, we have talked about it week in and week out here. Looking at precious metals a different way, though, and actually comparing them against each other. So we know gold done really well this year. Quietly in the
Mhm.
background, though, silver. Silver's up 47% or so at the time of this recording on the 17th. Gold up 40%. So silver actually putting together a more productive year so far than gold. But point being, we can use something called the mint ratio, which is essentially a simple division problem that just says how many ounces of silver do I need in order to buy 1 ounce of gold?
Mhm.
And we'll throw that chart up on. We wrote a feature in it in the report, so go check that out as well. But that is sitting around 85 or so. I don't have the chart right in front of me, but it's around 85, which is slightly above the 5-year average, but it's on the decline. We saw this peak, again, looking at that chart, we saw this peak in April of 2025. That would be a very defensive move, right? More people were fleeing to gold than they were silver because silver is
Mhm.
more economically useful, right? And so when we see this value spike, that means that more people are getting defensive, right? Tariff announcements, people are going to gold. Ever since kind of that peak, gold has underperformed silver drastically. We've also included the 50-day moving average in there, which again, you'll see it's I believe it's a gold line on the chart. That crossed, silver crossed below or that mint ratio crossed below that 50-day moving average. It crossed below on June 2nd. Since that point, silver has just continued to outperform gold, right? So the point is that using this as kind of an offense defense tracker can help you identify whether we're on offense or defense. Is it, is silver doing better or is gold doing better, right? Are we on offense or are we on defense? That's kind of the gist.
Well, and at this point, I think it'll be interesting moving forward to see, as we move towards the end of 2025 on early 2026, if we see a continuation of that decline within the mid ratio, because if we do at that point, you know, at least we're looking at positives or maybe some positives or people have more positives about the economy because then at that point we're seeing, less or more silver to buy gold. I forgot which way.
Less silver to buy gold.
There we
Yeah.
go. I was like, I'm gonna
Yeah.
let you say it first. But um I mean it'll be an interesting one to watch just as we begin a new year, what that new year is going to look like for us economically. Now that we've seen a rate cut, how has the economy responded? And, it could be another, at least sort of metric like we're talking about here, that you can say, okay, we're either seeing improvement on the economy or people are still being defensive, even though
Right.
we've seen rate cuts. So,
And remember, precious metals are still largely defensive. And I also want to put in an asterisk here. Saying this mint ratio will fall, which means less silver buys the same amount of gold, right? Saying that that ratio will fall does not mean that either one of those has to fall on their own, right? We
right.
talk about positive relative strength. That means that silver could just increase more than gold going forward. It could just continue to do so. And so that numerator, if we're thinking about division here, that numerator just continues to grow against the denominator, meaning that the kind of number falls. And but both assets are still doing well. I've definitely lost you if you're still listening, but it makes sense in my mind, right? So it has to make sense in yours too. But point being, gold does not have to fall, and silver does not have to fall for this ratio to continue to go down. That's kind of
Right.
the point I'm trying to
Yeah,
make.
yeah, you can simply have gold continue to lag as
Right.
silver
Yeah.
marches
There
higher.
you go.
Yeah.
That's why you've been around much longer than me because you could say it in much less words, right?
Well, we'll digress there.
You
I'll
got
show
anything
my
else for
age
today?
otherwise.
You got anything else for today?
No, not for today. I think in many cases, many are still just digesting what's going on with rates.
Yeah.
And I honestly think that will probably continue through the end of this week. I think we'll sort of hear varying opinions. We'll maybe hear some Fed governors change their opinions or change their tunes as things go along. I think in the coming week, we'll probably get maybe a little more color, maybe a little more idea of what direction we may be heading, at least in the intermediate term. But I think even then, there's going to be a lot of conversation over the next week that investors will have to digest.
Certainly. And speaking of digesting, couple shameless plugs if you're still listening. First, we're going to have our quarterly report webinar. That's going to be on the 2nd of October. So be on the lookout. We're going to put a registration link, not this week, but probably next week here. So go check that out. And then two, Nashville is still open, talking about digesting PNF, digesting how to use PNF in your day to day. Registration for that is still open. We'd love for you to join us there. It's in Nashville. So if any of you are listening are local to Nashville, let's get rowdy.
Yeah,
All right.
yeah, yeah.
With that said, everyone have a good one, and we will see you again next week.